The heat map gives you a quick sense of where we are landing in terms of market open across the 15 large cap names. And it's basically more up than down, definitely. So, Hindalco, Geofin, M&M on one end, and you've got HDFC Life, Maruti, Titan on the other side of the spectrum. So, there's a bit of a buoyancy, as you can see, 26, 244, 41, 40, 38. So, dancing around. Surabhi.
Teasing. But anyway, it's an assortment of stocks, really. Not too clear in terms of trends. Hindalco is up and about. There's L&T, there's M&M. M&M, by the way, is launching, an EV today, highly anticipated. I think it's the EV version of the XUV 700, so watch out for this one. Tata Motors passenger vehicle still continuing its good form with the buzz around the Sierra. 1% on that stock as well. Bajaj Auto is actually also up. So some of the auto names are looking good. ONGC, Bajaj Finance, Geo Finance. These are some of the early movers on the upside. Asian Paints about 0.5% higher. They're looking at expansion in international markets. On the downside, what's keeping a lid on the rise? Actually, no stock is falling too much. It's just the ones that are dragging their feet. For instance, Reliance Industries, absolutely flat, doing absolutely nothing. Let's check the other big boys. HDFC Bank, absolutely flat, no sign of move. ICICI Bank in comatose territory as well. And this is the reason why the market's not able to really make up its mind. ITC is up about 0.25%. Lever is absolutely flat. None of the big guns are firing. Let's check the tech stocks. Infosys, absolutely nothing, 1.5 rupees. TCS, totally flat, 2 rupees. So till these big boys decide which way they want to go, I don't think we're getting that close to the all-time high. So Nigel, the countdown is still on?
Well, that's right. The countdown is still on. A few stocks, though, from the broader markets that deserve special mention. You have Sterling and Wilson Renewable Energy. They have received the second South African project of around 1,300 crore rupees. Explains why that stock is up. You have another one, GMDC, the rare earth opportunity. That's the stock that's in focus, in today's trading session. Yesterday it was up, and today as well, seeing some follow-through buying. The gains will come in the next few years or so, but the street wants to price it in. Remember the stock, 650 to 550 now, even after the 10% move you've seen in the last couple of trading sessions. So that's another one on the radar. What else? I think you've already highlighted a couple of the other names that are moving around. Capillary Technologies yesterday as well, that came up as one of the top movers, and then it slipped from the top, but that one's opening up in the green. The dollar index has cooled off, so that's why you have metal stocks that are participating. Nalco, SAIL, they're all up in today's trading session. And GMDC, besides the rare earth opportunity, it also has this tailwind of being a mining-related play as well. Ashok Leyland is up another 2.5%. So pretty good start, but just waiting for a few more minutes, I think, before we hit the fresh all-time highs.
Okay, I think, we've got the broader market looking much, much better. So about 3:1, like yesterday. So 1,700 stocks are higher, and about 580 stocks are down at this stage. And it's a good-looking screen. GMDC, from the point that we put out yesterday, CNBC put out the story that the cabinet is basically going to take up the rare earth scheme for approval. This is in the afternoon. From that point, the stock's up about 10%. So it's been a meaningful move, 555 on GMDC. And we've got a discussion coming up on rare earths in a bit, in about 30 minutes' time. Excel Soft is a listing from yesterday. It's coming up with just a 2% pop, but it's got very large volumes for this point in the day. What else? You got Sterling Wilson Solar, 3% higher right now. Best Agro, 11%. It was a very large mover yesterday, and it's coming up with volumes right now. Ganesh Eco, the recycler, right? Completely bombed out name, but it's coming up. 8% yesterday, 8% today. It's, I think it was part of...
No.
Okay, I think I'm talking about... no, sorry. I misread it. Ganesh Housing is the one. Beg your pardon. Actually, the price is pretty similar, $900. 8% actually on this one. Yeah, that's the one. Ganesh Eco, the recycler, was the one which was on Nimesh's chatter list and, of course, did very well yesterday. But today it's, of course, kind of flattish. SMS Pharma was a big mover yesterday, 326. It's coming up with large volumes at this point in the time. Fino Payments Bank is the other one. Ended 10% higher, I think about 8% by close. But it's coming up. It's coming up with another, I think, 4% pop at this stage. So that's the picture. Whirlpool, of course, there's a large block, 10% lower. It's the number one volume-led loser at this stage, 1,077. Tahir Badshah is with us, Chief Investment Officer, Invesco Mutual Fund. Tahir, great to have you with us here. Thank you for joining us. So I think we will get this new high done. But will that change sentiment, Tahir, a little bit for the better? The written sell-side sentiment has changed on paper. Everyone is expecting a better year ahead, better returns, relatively speaking, after the tough year we've had, especially in broader markets in 2025. What's your sense, Tahir?
Yeah, I agree, Prashant. I mean, the setup is reasonably good at this stage. I mean, when you, all things considered, especially when we are coming out of a reasonably decent underperformance relative to many global markets around the world as well as emerging markets. And I think we've got, of course, some of the macro starting to look a little better, especially given that environment for a further rate cut, both globally as well as in India, is starting to look relatively more brighter. And I think alongside which, last but not the least, and most important, is that we've got some earnings acceleration as well in this quarter compared to what we've been witnessing over the last few quarters. So I think all this, it's not still a cheap market, but it is, obviously stayed in a place for a while and given you some kind of a time correction. So I think it just makes it a reasonably decent setup. And also from the point of view that, globally, I think we have been an anti-AI trade. And if that is starting to kind of come about, even for a limited period of time, I think that just opens up a window for the Indian markets to probably do well over the course of the next 6 odd months, if not more.
Tahir, hi, great to have you with us. You have been known as the mid-cap expert for decades. I mean, a knack for picking out those undiscovered stocks.
Fresh all-time highs.
Oh, it's happened.
Yeah,
sorry,
fresh.
Tahir. Sorry for that. It's finally happened. 26,280, 283. Nigel said it's going to happen in November. It happened in November. And this has been in the making for a long, long time.
Yes.
Painful wait going back to September of last year. Over a year, consolidation, the market testing investors' patience, but investors, and particularly retail investors, have kept the faith in a year where FPIs have sold off more than 150,000 crores of equity from India. But it's the domestic story that's gotten us here, and we're at all-time highs.
If you can just pull up the Nifty from September last year to now, I think it'll give you a great picture, basically, of what has happened. In one snapshot, late September on, I mean, if you can pull up a Nifty chart, I think we have it, right? That's November on, but maybe from September on. So you basically hit this high on 27th of September 2024. And then it was a slow grind lower, just sort of recounting what happened. And then there was a sharp-paced fall starting March of 2025, which took us all the way down. I mean, the low in April, the Liberation Day low was 21,743. I mean, absolute, actually, at that point looked like panicky kind of moves. And 21,740 or so is the low in April. From there, a very, very sharp recovery in a few weeks to about 24,500. Spend some time there, 25,500 by about August of this year. And then the real painful sort of part began because, August onwards, actually June onwards, the market just sort of, went into a grinding kind of move before this latest impulse move started, which is, of course, early November. We were at about 25,400 and we moved up we basically moved up 1,000 points from that point on very, very quickly. As we've crossed those new highs, you're essentially, a lot more stuff is in the green now on the Nifty 50 pack, the heat map basically, as you saw. I think now, Nigel, the small cap index is the last one?
Yeah, the small cap index is around 8% away from its 52-week high. The Nifty next 50 as well, that's close to around 6% away from its all-time high. And just a quick point out here, right? We're talking about all-time highs, pulling out the champagne, things are looking good. We're getting into the end of the year. That's due, Prashant. That's, expected during the course of the day. But things are looking good. But just to give you a couple of data points, as you said, Prashant, we pull up the chart from September 2024 till date. We're just back at where we were. But forget about the broader markets. I'm looking at individual stocks. Trent, that is 40% away from the high that we saw on that day. Bajaj Auto is 27% away from those highs that we saw on that day. Coal India, another 25%.
Yeah.
TCS, another 25%. NTPC. So I can see frontline Nifty names that are 25 to 45% away from those all-time highs. Champagne is being popped, but some people have not participated. No champagne, no good snacks, no music, nothing, no DJ.
Why, that's why I asked Tahir, right? I mean, will this really change sentiment? Because actually, I think it rarely happens that the market hits a new high and sentiment actually is low. And you mentioned, Nigel, large caps.
Yeah.
But if you go down to mid caps,
absolutely.
I think Nimesh is putting that piece out for ERT, Editors Roundtable, tomorrow.
Oh, lovely.
Looking at the Nifty 500 stocks and what, I mean, it's looking pretty bad. And I'm talking about names, not some two-bit stocks out there. These are stocks where there are large institutional holdings of, single mutual funds owning 7-8% kind of holdings. And where there was frenzy 6, 7, 8 months back, and it's kind of gone south completely the other way. And I think that's the reason why, even though we are at a high, and I think we should acknowledge that we are at a high, and we are acknowledging. I think at a portfolio level, it doesn't feel like a new.
And if I were to put a guesstimate just to that Nifty 500, stocks, I don't think even 300 of those stocks will be anywhere close to those highs. So just putting a guesstimate out there. So for the headline index, there's been a time-wise correction, but for the broader markets, it's been a price-wise correction. We live in hope that 2026 will be far better. And then, in fact, portfolios will gradually start to feel that they are part of the party.
And then we can open the champagne.
So for the mid-cap 150 index, we're about 4% away from that high. If you talk about, obviously, IT has been the worst performer, has not really participated in this rally. So that's one area to look at. Even the defense index, which had such a stellar time, the April, May, June period, from the highs, even the Nifty Defense Index is well off, about 5-6% off those levels right now. So the rest of the market perhaps needs a bit of a catch-up. And Tahir, that was the question that I was coming to you with, actually. I mean, you're such an expert on mid-caps and small caps. So what's the feeling at this all-time high? And how should investors now go about, refreshing their portfolios, looking at their portfolios? Where do you still see the opportunity of a catch-up rally?
Yeah, so clearly, I think where we have clearly lagged is as far as the broader market is concerned, and more particularly in the broader market, I think the small cap space is obviously something which is very clear, given its recent underperformance, and more probably from the point of view that earnings acceleration has not happened there, or earnings have actually been decelerating, in that space, and I would like to think that is a place which will probably start getting more attention as we get into a scenario where overall, at a system level, we start to deliver more earnings growth. And I think that will be the test. I mean, it's nice to see the new all-time highs, but it needs to kind of broaden, spread to the broader market as well. And I think that will call for this nascent earnings acceleration that we've seen in the last quarter to sustain into the next few quarters of calendar year 2026 as well. And that is when I think we will probably see, relatively stronger risk on sentiments compared to what it is.
So Tahir, I mean, I know, and when we're talking mid-cap, small caps, it's all entirely bottom-up, and I know you can't talk stocks. But in terms of pockets where you see some growth visibility coming back, and there is a nice valuation entry point as well, what will it be? Because again, I'm just going into sectors. Defense, which was such a loved theme, at an index level, it's about 10-12% away from the peak. FMCG, despite the optimism around the GST cuts, obviously hasn't moved. The FMCG index is still 6% away from the highs. Now, different arguments. Maybe, FMCG is not the best way to look at growth in the second half. But again, in terms of themes in the broader markets, which ones will you keep your eye on?
I think by and large, we've kept to the same themes more or less for the last good amount of time. I'll count out things like, healthcare has been one of our favorites, especially domestic hospitals and, some of the domestic pharma companies as well. Alongside which we have been very optimistic as far as banking and financial services, more particularly NBFCs to begin with. And now it is incrementally spreading to the frontline banks, both on the PSU as well as on the private side. I think we've always been constructive as far as the capital markets play is concerned, once again as a section of BFSI. So that's something which is not exactly. I mean, it saw a dip in terms of valuations, and valuations have crawled back up. But that is where growth still continues to significantly stay ahead of system rate of growth. Lastly, I think pockets of consumer discretionary, which by rotation tend to move from one pocket to another. But in general, that is a class which, given all the developments of the last some time, is something where we continue to kind of try to find ideas. Consumer fintech still remains our favorite across many of our portfolios, and that's right up there in terms of our preference list. Yeah, that's pretty much there. And I think IT is obviously been a value play, but it is starting to find its feet. And I think it is quite fair to assume that we will probably get into a bit of an acceleration as we get into the part of 2026.
Yeah. I just have a question. I know, Tahir, I know you can't talk specific stocks, right? But I'm just using GMDC as an example. Let's put it up. And we have a rare earths discussion coming up a little later. This is about the state putting its might behind developing a new industry, right? Now, GMDC apparently has the reserves, and I think Nigel has the numbers and he's been telling us, but it's a long story as we understand it. How do you think about something like this? I mean, earnings are not going to come anytime soon, but here's the government which is sort of prioritized it as a national security industry. What's your sense, Tahir? Something like this, for example, what we saw with, say, railways a couple of years back, it was a different situation. Defense, for example. Now it's rare earths. Shipbuilding is another one. Any thoughts?
No, some of these sectors do appeal, especially shipbuilding for that matter, and certain other infrastructure pockets, which are relatively more easy to, they're in our control, and essentially we're not looking at competition from outside. But I think some of the newer technologies or technology related, whether it is rare earths or whether it is even, EVs and so on, and everything to do with the EV ecosystem and so on. I think that part is still a long way to go. And, we don't really have many plays, or we don't have many vehicles to play some of those opportunities. Even I can understand the intent of the government, given the policies around the world. But we also, from an investment standpoint, need the vehicles, which we have in areas such as, other parts of the market infrastructure and, what are things that you called out, railways, ports, etc. But we don't have an adequate measure in some of the others. So I think that is still some time away. I think for us, India, it is basically the diversity that India offers. So that's why, as and when the attention from, AI becomes a little softer, and I don't expect even AI to go away anytime soon, but we get that window of opportunity where diversity comes about, and asset managers around the world start to rebalance their portfolios.
Tahir, before we let you go, our next discussion is on real estate with a real estate company, Prestige. We'll have Mr. Razak join in shortly. But I want to get your thoughts, because this is one more sector that's a little confounding. When you talk to the developers and when you see their numbers, and all of them have had actually pretty solid last couple of quarters, right? Pre-sales have been good, collections have been up, pricing has either increased or has been stable, but the stocks have languished. The Nifty Realty Index is almost 19-20% off the peak. So what's going on here, and what's your sense on this part of the market?
No, absolutely fair. And I think that is another part which I forgot to mention is a reasonably important element of our portfolios as well. And we've lived through it. I think we've enjoyed the fruits of it as well 2 years prior. And the last year has been somewhat slack across the sector, but that's understandable after a very strong rally. But I think generally we feel that this is still a segment which where the growth cycle is relatively more sustainable. I mean, we've seen real estate generally has long cycles, as we all know, 10 years up, 10 years down. That kind of a thing, and we are probably still in mid-cycle zone, and we've a good part is that stocks have corrected. So actually, we will see momentum start picking up once again. There is we from a more longer-term standpoint, we believe that the biggest driver of real estate is essentially the fact that we're going to see a significant migration from low middle-income households to upper middle-income households. As you look at it on the income spectrum, and that is a once-in-a-lifetime event in any country. In any country's history, and India is already in that process, but it is only going to get bigger and bigger. So we are going to see probably almost 20% households move from low middle income to upper middle income, and that is essentially what is going to drive a lot of the real estate demand. And we are also in the midst of an upgrade cycle as far as real estate is concerned. Everybody wants to premiumize as far as the housing is concerned as well. So I think it's relatively more sustainable, and especially in an environment where interest rates are make it more affordable. And so I would like to think that this is something which should come back. That is one of the sectors which we hope will be a cyclical recovery in 2026.
All right. Thanks a lot, Tahir, for joining in. Wishing you a good day ahead. And hopefully the next time we chat up, the broader markets will be participating as well. For today, we're celebrating the Nifty at all-time highs. Well, Prashant, just one quick point on what you said. The state government push. When the management push comes about, a stock like GMDC, for example, we here at CNBC-TV18 had explained the prospects in 2022, June. A viewer's, in fact, just written in. The stock was around 150 rupees. It had cash in its books, but the intent of the management wasn't there. And you couldn't reach the management for many, many years. Suddenly, you had a change in management. Mr. Gupta came in, Mr. Singh came in at the top as well. And that's where the fortunes started turning as well. So the intent to create wealth as well is something that's very, very important. And communication with the street is something that the street tracks as well.
The point is, and I spoke to yesterday somebody, I think Nimesh also tracks this one closely. And the point is, and I think it's still, you got to get this stuff out of the earth, right? Now, the mineral is, the stuff is there under the ground. You got to take it out, right? That's essentially the thing, and that's 3 years, 4 years out.
Yeah.
Now the point is, rare earth processing is a different matter.
Yeah.
That is a new industry you got to set up.
Yeah.
That will take time.
Yes.
So that, I think we've got a chat coming up, and we'll try and understand. But the point is, can this be fast-tracked with the centre now coming in and putting in a policy that we've got to develop this industry in a big way? I think that is the question for a company like GMDC, and we'll try and understand this, and we'll try and get GMDC, the company, on the channel once again. We'll take a quick break. 70 points higher, 26,275.
I think before we...
I think Hormuz is with us, right?
Yeah.
He's standing by. He's prepped the data on where markets are, stocks more importantly are, September 24, and where they are now, even though the index is back at those levels. Hormuz, take it away.
They say sabar ka phal meetha hota hai. It's taken 14 months long of sabar to get to where we were back in September of 2024. It's, of course, the record highs for the Nifty in today's session, and from the lows that we made this year, which was on the 7th of April, we are up 19% from those levels. You look at the stock contributors as well, among them, starting from the 27th of September. You look at Eicher Motors, BEL, both of them up over 40%. Bajaj Finance cooled off from the highs, was among the top gainers, still up 30% from over the last 14 months. And making a move also is SBI and Bharti Airtel, gains of 23% each. Now, the list of underperformers also is a list of some big names. Bajaj Auto, incidentally, also made a record high on the 27th of September 2024. It's down 30% from those levels. Trent has almost halved during this period, and also making a move here are Coal India and TCS on the downside, losses of well over 25% each. Now, if you take a look at the movers from the April lows, some similar names here. BEL finds a mention here as well at 53% from the lows in April. Mahindra & Mahindra, Eternal, Jio Financial and Eicher Motors here as well. Gains of well over 40 to 50%. When you look at the sectoral indices over the last 14 months, banks have been the big contributor to this move. The Nifty Bank, already at record highs, is up 11% during this period. The auto index hasn't done much. IT, the other big sectoral weight, has somehow offset the moves from the banks. The pharma index hasn't done much, but the bigger underperformer compared to IT has been the FMCG index. That's down 16% over the last 14 months, and the metals index too is up only just 2%. But if the Nifty is at record highs, the broader markets have done precious little during this period. The mid-cap index is up only 1%. The small-cap index, in fact, is down 7% over since September of 24. You take a look at the movers in the broader markets. You look at BSE. The stock has more than doubled, in fact, almost 2.5x from that period. Paytm is up 90%, still, of course, below its IPO price. Muthoot Finance hitting new highs. Indian Bank, among the PSU banking names, is up 64% during this period, as well as L&T Finance, not an NBFC that we talk about daily, but still up 63% during this period. Among the underperformers, of course, Colgate, IndusInd Bank now out of the Nifty, down over 40% each. Tata Tech, another Tata Group underperformer, down 40%. RVNL, the high flyers of 2023, down 40% as well. And Ireda, another PSU name among the list of underperformers. You look at the small cap names, Laurus Labs, after some quarters of struggle, is up almost 110% in the last 14 months. MCX at new peaks as well. Sagility, a recent listing. Naveen Fluorine, Narayana Health, all seeing gains between 60 to 70%. But look at the underperformers. Ola, that shows the pain in the broader markets over the last last year or so. That Ola Electric, Tejas Networks, Jindal Saw, Brainbee is a recent listing, and 50 to 60% of losses. Whirlpool too. Now add more another 11% too. There's 46% drop as well. So there has been pain in the broader markets. There have been stock-specific winners as well. But the point being today that the Nifty is at a record high.
You know, it's such a different feeling, Hormaz. Thanks so much. That's great data. And, you know, those stocks really illustrate the point why this all-time high is probably one of the most thanda all-time highs we've had in my recent memory, right? And that's exactly what it is. It's not been one momentum-driven market where everything is up and about and there's, you know, there's raging bravado. It's been almost a, you know, an all-time high of disbelief. And even now the screen is a little thanda. But having said that, I think in the next couple of days we'll have the answer. And some of the technical experts were pointing this out. If the momentum now starts building up, if this level sustains, and if we cross the next 100, 200 points, and something starts building, then maybe we'll be looking at a very different market. But yeah, I mean, as of now, it's been just quiet, thanda. It's almost like a relief. Chalo, finally, ho gaya.
The foreign, the foreign guys need to come back and sustainably so, because everything else is there, right? But there's one missing element. Hopefully that changes.
Absolutely. And there's been a lot of sector churn. I mean, the winners are very different. There's been a lot of pain in the stocks that have fallen by the wayside in the last 1 year. So very different all-time high. Anyhow, one sector on which people have been increasingly optimistic, and you just heard Tahir Badshah also make that point, is real estate. So let's get that conversation going. Mr. Irfan Razak, CMD of the Prestige Group, is with us. Mr. Razak, thanks so much for joining in. You know, from a market perspective, and we were just discussing this with the guest who was on earlier. While all of you, most of the listed companies have been sounding optimistic, the numbers have been good, the pre-sales have been good, real estate stocks have been a little quiet and somber. But we're not discussing the stock with you, we're discussing the business performance. Super solid first half. The question is, can this sustain? Can this last? This 8-9% increase in pricing that you've reported, the kind of pre-sales momentum you've reported, you know, is the going continue to be as good as you look at the rest of the year?
I believe, good morning, I believe that the momentum definitely can sustain. It's all about how you strategize and how you work yourself up and bring in the pipeline. And since the going is good, since there is demand, the teams also have been working very well and very hard to see that there is more and more inventory that we create and bring to the market so that the pre-sales can also be managed and the momentum is kept up. Yes, we have reached at certain highs. Now, from these highs, the only thing is that we have to sustain this. We have to make sure that the same momentum goes on. The demand will be there, but the most difficult part is bringing the inventory to the market. What it means by bringing the inventory to the market, land is the raw material, then it's the approvals and all of that. So it's a bit a tough job. But I think the teams have pulled this off in the last 2 quarters. And I think the next 2 quarters also should be pretty strong.
So, I mean, and you know, real estate obviously is a lumpy business. So you'll have some phenomenal quarters and then 1 or 2 quarters, there can be a lull. But if I average it out, I mean, you've been growing at 50%, at least in the last quarter. For this year as a whole, and more importantly next year, because, you know, your launch pipeline has been huge, 18 million square feet, right? So give us some sense, on a sustainable CAGR basis, what's the kind of sales growth you're hoping to clock, not just this year, but going into next year as well? I mean, is 25-30% growth in sales momentum, is that a fair assumption?
I mean, it depends on what base you're starting at. See, now the base that has come up is quite huge. Nobody ever thought that a listed real estate or unlisted real estate company could do more than 10,000 crores in a particular year. Now that got surpassed. Then we talked about 15,000, that got surpassed. Then 20,000 got surpassed. So now we are all thinking that probably we can reach the 30K mark. But then at that level, at that base, for you to grow again 25% will be quite a challenge. But I think it would be fair to assume that we have to keep growth. And a fair growth between 10 to 12% on a very high base should be very reasonable to expect. And I think that's what we, along with the team, should work together to see that that is sustained. And because the market is there is demand, there is a need.
And that you're saying, sir, at the pre-sales level,
Yes.
10 to 12% steady state pre-sales growth year after year in the near visible future, right?
Absolutely, absolutely.
Okay, and this is from here on, because pricing has also gone up in most markets, and we were having this conversation with Pavitra Shankar just yesterday. So pricing is also important to understand, right? And pricing has gone up very smartly. Even for you, I think realizations are up 8-9%. So from here on, this pre-sales growth, will it largely be a function of volume? Or is there some scope to enhance pricing as well, across blended pricing across the portfolio?
No, I think it'll be more of volume, and I personally do not want the pricing to run up much more than what it has. Yes, pricing correcting itself and adjusting itself against inflation that's what is expected. But unreasonable pricing because land price has gone up, expectations from landowners are more and more. That can't happen. And that should not happen. It's going to be counterproductive because we have to have an eye on the affordability also. We have to make sure the goods that we are producing are also acceptable at the consumer level, and the consumer is as yet able to still buy the product. It should not just go beyond their reach. So if we do a blend of both, yes, there is that niche market, which is the luxury market. That's a separate, I would say, a world altogether. But where the volumes will come from and where the business is the mid-income market, and that's where we need to have our eye on and keep working towards it.
Okay, all right. Hi, Mr. Razak. Just one quick question, sir. Good to hear that your business is doing well, and I'm seeing your projects coming up in Mumbai as well, which is good. The problem is this air quality is getting bad. And, various quarters of the government are saying that they're looking into it and they'll be sounding off various developers. Anything you have heard on that front and any measures that you're taking? Because the air quality out here is, really taking a bit of a hit. So your comment on that.
I think in whatever work that we do have to keep an eye on the environment, including the air quality. It's just not the developers who are responsible for the bad air quality. It's a combination of many things that happen. But I don't want to shrug that off. We as responsible developers would definitely like to take steps and measures that will not allow dust pollution to go out of our sites. There are many things that we can do, including, we have to have that proper shielding of all the dust that goes out of the property. Okay. We have to do, our trucks have to be wheel washed when they go out. So all this will help. Even small measures do help. And at the end of the day, that is what is going to protect the environment and protect the air quality. And collectively, if it's done, it'll have an impact.
Sir, quick last question. That's air quality, and we're really dealing with it. I mean, it's just could never imagine that a city that's next to the sea will have issues similar to the national capital, which is landlocked. But that's the unfortunate part we're in. Quick last word on the labor code, sir, and whether that impacts the real estate industry in any way. Do you see costs going up? Because now it's all getting formalized. A lot of the additional benefits would perhaps be coming through.
I think labor is off late in the last few years has been a concern. Unfortunately, there's migrant labor that comes in from the eastern part of the country. It's who comes and settles down here and works really hard and produced again to churn the wheels of the economy. And they need to be protected. They need to be paid their wages correctly. And I do believe that labor has to be, one thing is skilling needs a lot more focus on. And we need to bring more and more quality of life for the labor so that they come and take these trades and they keep producing. Because
what is the cost increase, sir, if at all? I'm not sure, because there are 4 different codes and one of them deals with working conditions, health and safety, etc. So Have your teams right now worked out if there is a cost implication, any increase?
There will be a cost implication, but I think it is for the good. And they will be because, see, I believe labor is the last person in the line, and their lives also need to have a quality of life. And we should be the first to see that we protect that. And I think the cost increase on labor, just that component of labor, should be anywhere between 10 to 15%.
Okay, so labor costs could go up by 10 to 15%. That gives us a sort of ballpark working estimate. And of course, like you're saying, it's for the good. So it simply has to be sort of taken up. Thank you very much, Mr. Razak, for joining in. Good to get all of that perspective from you. You have a good day as we go forward. We'll take a break. And are we still retaining the all-time highs? No, we're not. We've actually slipped 26,243. After the break, we get you a special discussion on India's big push on rare earths. Rare earths, they're mining, taking it all the way to creating those magnets so we do not face a crisis like the one that the industry was in just a couple of months back. Back with that discussion in just a bit. Welcome back. Okay, that's a really important story that's breaking on your screens. It seems Tata Power's Mundra UMPP, the ultra mega power project, could resume operations by, well, December. And Vivek is picking up more details. Vivek, this has been stranded for so long, those power purchase agreements that just don't get signed and the whole tariff issue. What's the latest?
Well, that's right. So it's an important development as far as Tata Power is concerned. What we are picking up from our sources is that Tata Power's, almost 4,800 megawatt ultra mega power plant, which currently is stranded. It doesn't have any long-term PPAs with any of the 5 state governments, and also it is not currently operating under Section 11, that is the Emergency Act, where power was being procured on a cost-plus basis. But what we are picking up is that now the plant is in a state of readiness, and as the management had alluded in its Q2 conference call, the company as well as the Gujarat state government have reached an in-principle agreement to go ahead and sign a supplementary PPA for this particular plant. Now, this actually will end almost over a decade of an overhang as far as Tata Power's Mundra facility is concerned. And this PPA, we understand, will be reflective of the current cost of the coal that is being imported. Now, also, the important thing is that in the conference call, as well as what we understand from our sources, is that all of the 4 other states, will actually use the Gujarat model as a precedent to go ahead and sign PPAs in case this does fructify. It's an important development. We reached out to the management and we've been constantly getting their feedback as well. At this point of time, they're not responding. But an important point to note is that in the Q2 conference call, in a pointed question that both we asked in the media call as well as the analyst call, the management said that while they could not run Mundra under section level, they are in discussions with the government of Gujarat to finalize and they expect that the conversations which are in the last stage should be done by the end of December itself, or they are hoping to close it by December. Just to note, in 2007, Mundra signed PPAs with 5 state governments, which is Gujarat, Maharashtra, Punjab, Haryana, as well as Rajasthan. Now, just to give some perspective as to how important this particular development is for Tata Power, when the plant was operating under Section 11, Q4 FY25, now the company reports this particular segment as a cluster of Mundra, coal, as well as shipping. So it includes also the Indonesian coal mines. It reported a profitability of 171 crore. And for FY25, on a base of almost 4,500 crore of PAT, this particular segment contributed over 1,000 crore. So it's an important part of the total financials. Now, in the 2 quarters where the company did not have the plant operation, Q2, the company actually reported a loss of 362 crore in this particular cluster. So any kind of relief, any development, or any positive action, especially from state governments, when it comes to Mundra, is an important development for Tata Power, and we'll be tracking this particular development closely.
All right, thanks a lot for that, Vivek. Well, let's move on then to the next important discussion. We have the Union Cabinet that approved an incentive scheme to promote domestic manufacturing of rare earth magnets with an outlay of around 7,280 crore rupees. To help us out with what this means for the industry and the way ahead, we're joined by Mr. Mohanty, the Director of Finance, IREL, and Mr. Panda, the MD at IMFA. Good morning, gentlemen, and thanks a lot for joining in. Well, Mr. Mohanty, let me come across to you first. I believe that you all had plans to set up rare earth magnets plant in Visakhapatnam, if I remember correctly. What is the capacity, if you could tell us, and how do you look at the cost competitiveness post the scheme that has been announced by the centre?
Good morning to all. Actually, the point is rare earth permanent magnet are 2 types. One is from the samarium cobalt, and then another one is NdFe boron magnet. This samarium cobalt magnet IRL has already set off in Visakhapatnam. That is for the purpose of strategic use and not for the commercial use. The NdFe boron magnet, which is the scheme has come up with the initiative of the Government of India, which is a landmark step towards strengthening the domestic REPM manufacturing ecosystem. And this will definitely add technological self-reliance for the country. And this will bring the price visibility currently around 43 to 44% is existing. This scheme will trying to mitigate that gap so that all the investors will come forward and this ecosystem for manufacturing of magnets will be developed in India, which is missing since long.
Mr. Mohanty, I just have a question on how the scheme is going to function. And I'm just quoting what the release said yesterday after that cabinet meeting. So the total scheme outlay is 7,280 crores. It has 2 parts. There is a sales-linked incentive, which is 6,450. and this is for 5 years, and then there's a capital subsidy for 750 crores. So can you help us understand how these sales-linked incentives will work? What are the thresholds? What is your understanding of the scheme? And it's open to all players, private and public. So will you be working with private players, or will you be largely doing this, setting up some new capacities on your own?
Particularly, this scheme is the intention of the scheme is to invite private players to come and invest in this sector where there was a price disability. So for this, the government is looking for now particularly 5 different manufacturers to come where the maximum the subsidy will be given for 1200 ton of magnet making. And minimum is around 600 ton something they have kept. So once the 1200 ton magnet making will come per ton sales basis, this there will be one expression of interest, and based on that, each bidder has to quote what will be the maximum benefit they want, the maximum subsidy they want from the government of India. So on that basis, it will be worked out, which is envisaged to be 1,290 crore per annum for 5 years. It will be around 6,450 crores.
So will you be, again, the second part of the question, sir, is whether you will be partnering with private players, or will you compete with private players in setting up these rare earth facilities?
It can be. Actually, the situation is wide open. The private players, if they have got the tie-up with different magnet technology providers, so private players can join with IRL, can do it, or IRL can take the technology from others and can set up, or IRL per se is responsible to supply this NdPr oxide, which is the neo rare earth elements, which is required for manufacturing of these magnets. So IRL will be,
yeah. So you can partner, you can do it alone as well. Just a couple of basic points. This subsidy, etc., is for actual magnets, not the mineral out of the ground. It's not about how much you mine, but it is about the magnets themselves.
Yes, exactly.
Okay, which means that there is a processing capacity, etc., which needs to be set up for you to do this.
Yes.
I remember in our conversation earlier, just to go back to the basics, you said that we have lighter elements in India.
Right.
The total reserve is about 7 million. Heavier we don't have, and that's the issue.
That is the issue.
How does that work against how does this resolve that?
Actually, I'll tell about that. India is the 3rd largest resource for this rare earth ore. So currently we are having 8.35 million ton of rare earth. So for this, but this is lighter rare earth. So lighter rare earth, particularly NdPr we are having, but we require dysprosium and terbium, which are required for the this coercivity, or to have this high remanence, which allows the retain high magnetization and the coercivity in the magnet. So if that is not there, then this manufacturing will be difficult. In Indian resource, it is not there. So it has to be imported. This is available. Out of China, it is also available, like Malaysia and Australia, it can be sourced. At the same time, India is also looking for this source from the carbonatite source, which is available in Gujarat as well as the Rajasthan Siwana ring, where ample quantity of this dysprosium and terbium is available. Around 5% of the rare earth oxide available there is available, but this is at the exploration stage. Quickly, it is in government of India is.
This is with GMDC.
Yes, GMDC is Ambadonga, and the other one is Bhatikara. Is again,
so you're saying some element which is required to enable the magnets to be made is available with GMDC, and another.
GMDC, the GMDC, the facility has not come up. Right now, this dysprosium and terbium has to be imported. And on top of that, there are technology available like Protorial and this VAC of Germany. They are having this technology of making rare earth magnets without using the dysprosium and terbium.
Right.
So, sir, what's the, and this is really important. So, while the intent is fantastic, we want self-reliance in these permanent magnets because of their widespread industrial use and auto use. But the success seems to depend on GMDC finding reserves of the certain, or you get a technology partner from, say, Germany, as you're saying. So can you tell us from your perspective, Indian Rare Earths, Are you looking to set up these facilities for the magnets? We're just trying to understand the competitive landscape. Will you then, are you assured of certain supplies from GMDC, or have you started a tech transfer conversation with the Germans, say?
It is not exactly German. German is there, one of them. Then Japanese, like Hitachi, which is Proterial now. The Proterial is there, and Sensex, which is the largest magnet manufacturers. They are also all available. So technology transfer and other things has to be examined. Once this scheme has come now, then a lot of private players as well as foreign investors are showing interest. Okay. And IRL per se is the provider of this NdPr oxide. Okay. So the NdPr oxide will be provided by India, IRL. And this GMDC particularly, right now they don't have dysprosium and terbium. So this has to be definitely imported right now. And we are also looking for those technology which doesn't require dysprosium and terbium. And if it will be required, very, very minuscule only. Okay. Only around 0.5% of terbium and 1 to 3% of dysprosium.
All right. So just keeping those chemical compositions aside, just to understand simply, the scheme is for magnets, which is more downstream in nature, and the chain is rare earth mining to rare earth oxides to metals to magnets. Is that correct?
Yes, absolutely.
Got it. So let's bring in then a potential player. Mr. Panda has been waiting by patiently. Mr. Panda, you have excelled in your business, the only miner here of chrome ore in India and backward integrated with regard to ferrochrome. How big an opportunity it is for your company, and what is your comment with regard to this? The scheme has come out, 7,000 crores. The center clearly is encouraging players to come in there. Exciting enough for you?
Well, it's certainly a very, very significant scheme, Nigel, because not only are rare earth magnets important in themselves, but look at the broader picture. This is, as you just mentioned, it covers the entire value chain from mining all the way through to magnets. Yes. Number one, but it is a scheme which has implications and impact on major initiatives like Atmanirbhar Bharat, because you cannot look at self-reliance in manufacturing or many of the sectors where, without having control over rare earth magnets. And equally, that has then an impact on your Viksit Bharat ambitions. And finally, if you look at net zero, because rare earth permanent magnets have have usage in defense, in EVs, in semiconductors, etc. So there are multiple sectors related to your net zero ambitions. So from that perspective, I think this is something very significant. And what you mentioned about IMFA in particular, we of course have decades of experience in mining, in processing of ores, etc. Now I do recognize this is a different cup of tea. Conceptually, it may be similar, but it is a different cup of tea. But inherently, I would say that we are amongst the few who understand it off the bat. And it's a question of going out and evaluating the details when the scheme is out in the public domain, as it is at the moment, going through the details and looking at what is there on offer. Mm-hmm. But off the cuff, I would certainly say that it is a great opportunity. It is something that we would certainly want to evaluate and see that how it fits in to our own sort of capabilities and strategic ambitions.
All right, and well explained, Mr. Panda. So there's an opportunity out there. We'll have to wait by for the fine print, and then in fact you'll take a call. But will you have to look for technology partners as well? If you could give us some kind of a sense in terms of partners that you'll be looking at, particularly on the technology front.
So I think two aspects are important. I was reading up on the scheme a little bit, what is available in the public domain at the moment. So it's both the sourcing of the rare earth oxides, and that's where IREL is an option. But I believe one has to look at some imports also, at least in the initial stages, while we focus on more sort of exploration, etc., to look at other resources. But this is where I think the government will come into play, both from a point of view of sourcing of the raw material as well as technology. And again, as Mr. Mahanti was explaining in his detailed intervention, that IRL itself could be a source of technology, but I believe there are other technology providers out there. So one has to look at it and look at it from I think this is something clearly one has to look at, not just from a commercial perspective, but also from a national interest perspective. which is to, the intent of this scheme is to bring about, greater reliability to the supply chain.
Yeah,
So I think every decision that one takes, whether it is sourcing of the raw material or the technology supplier, etc., I think has to have a national interest element to it, which I can't say overrides commercial interest, but is as important, if not a little more.
Okay, no, absolutely, very well explained, Mr. Panda. Mr. Mohanty, so to you, for investors who are watching, I think you should list IREL. I think that'll be the.
Is there a plan?
Are you thinking about it?
Actually, IRL is a strategic unit. So far we are exempted from getting listed. So the options are open.
Okay. So
But has that gone up to Deepam at all, Mr. Mohanty? Any discussions?
Nothing has happened so far. It is all we are evaluating.
okay. So it's not out of the question. But
Yes,
of course,
yes,
I
definitely,
hear you.
definitely.
I know this is an unfair question to ask you, Mr. Mohanty, but maybe let me put it to you since we have you and you've explained the entire value chain and so well. From a GMDC from a GMDC perspective, you said, well, they don't have production of this now. In your opinion, with this push from the center, how far out is production when we see meaningful output from the mines that they have, Mr. Mohanty?
I think 3 years down the line, 3 to 4 years down the line, that will take.
Okay, 3 to 4 years down the line.
Right.
Okay.
Because actually it is on the exploration stage, and now from the exploration to they have to the flow sheet and other things must have been developed by now. They have to invite the tenders, put of the plans, statutory clearances and other things are there. So that itself takes a little bit of time. Other than that, setting up the plant and getting the production 3 years down the line. And considering the scheme, whatever is there, and the kind of interest shown by private as well as the government sector, so it seems 3 years, 4 years down the line, 2030, India will be definitely self-reliant.
Got it, Mr. Mohanty. Thank you very much, Mr. Panda. Appreciate you joining us as well. Very useful and insightful discussion, and we wish you both the best of luck as the scheme tries to help in this, building out this ecosystem. Sensex has hit a new all-time high as well. So we've crossed 86,000 for the first time. Nifty, of course, 26,300. So records all along this morning on both the Nifty and the Sensex coming through. I mean, the small cap index, of course, now some distance away. The Nifty next, of course, is also close by. What we'll do is we'll take a quick commercial break here. We're going to come back. We'll just look at commodities and what's top of mind with Manisha. Stay tuned. Coming up.
Welcome back. Fantastic morning for equities, all-time highs. Let's see what's happening in commodities. Manisha, over to you.
Thank you for that. I'm making it a sweeter Thursday for you because I'm talking about sugar right now, where we have seen the prices gain up in the international markets. We've crossed above 15 cents a pound, and that is a one-month low, one-month highs coming in for the sugar prices. So when you look at the overall move that we've made in case of sugar, it has gained up by nearly 5% for the month of November. YTD, we still seem to be holding on to those gains of around 21%, as you can see on your screens. And this is going to be a second straight year of negative moves coming in for the sugar prices. Well, the reason for this is that almost all countries seem to be producing more sugar. So last year, we were dealing with a deficit of 2.9 million tons. But this year, the new season, that is, we have a surplus of around 1.6 million tons. This is what is coming in from the International Sugar Organization there. Having said that, we are looking at higher production, not just from India, but from Brazil, which is the largest producer of sugar, and then Thailand, which is the third largest producer of sugar. So between these three countries, we are looking at higher sugar production this time around. Having said that, India will also export 1.5 million tons in the global market in the new season. That would mean more sugar entering the international markets there. Interestingly, when you look at the new season there, almost all agencies which have come out with their numbers yet, whether it's about ISMA, NFCSF or CRISIL, are all talking about 35 million tons of sugar this time around, which is nearly 18% higher from what we had in the previous year. Reasons for higher sugar this time around is one, higher cane acreage. The second is about favorable weather. And we also are looking at higher yields this time around. The India sugar industry has a lot of concerns, though. So even as we are looking at higher sugar production this time around, the MSP revision for sugar has not happened since 2019. At that point in time, the sugar prices were set at around 31 rupees a kg. That is where it stands right now. While the cost of production has increased to 41 rupees a kg, that is because you have seen constant hikes in sense of FRP from 275 to 355, but it also has been about the state advised price, which is SAP, which has been increased. Add to that the bonuses as well. So the price that the mills are paying to the cane farmers is much on the higher side, but the sugar realizations not so much. The other thing really is about the ethanol prices, which also have to be revised for a third straight year. We haven't seen a revision in that. And this season it started, markets are anticipating could happen in the next fortnight or so. The other thing is about the concerns that the sugarcane distilleries are working at less than 50% capacity. So when ethanol blending was started and the whole plan was put out, it was to ensure that the sugar goes into this. But if you look at the rotation, or rather the ratio right now, that stands at 30 to 70. So 30% is what we are seeing coming in from sugar, and 70% of ethanol right now is coming in from grain base. A bit of a heartburn when it comes to sugar industry there. If you look at the global prices, they have declined by 22% in this year. That doesn't augur well as well for the exporters right there. And then it also has been about volatile production trends, compensation from the, competition from the good and unorganized Khansari sectors as well, are some of the challenges that sugar as an industry seems to be facing on.
All right. Thanks very much for that. Manisha, appreciate you taking us through top of mind in terms of the commodities and soft commodities in focus. Lata is going to be speaking with a very special guest on the other side of this commercial break. Axis Bank MD and CEO Amitabh Chaudhary on their FY27 outlook. That's coming up in just a bit.
Welcome back. Axis Bank shares are trading at all-time highs, of course. Sensex Nifty and the Nifty Bank are also trading at all-time highs. Axis Bank posted perhaps the fastest loan growth compared to the top three private banks at 11.7% in the second quarter. There was a very good margin management as well. While many brokerages, Jefferies, Nomura, HSBC, have all a buy rating on the stock due to the better valuation, analysts are worried about the repeated one-offs that have hit the P&L and, of course, more lately, some high-level resignations. To get an idea about the bank and how it sees the coming year, that is 2026, I have with me Amitabh Chaudhary, Managing Director and CEO of Axis Bank. Amitabh, good morning. Thank you very much indeed for your time. You're the first big banker we are speaking after the festive season. So how was it? How was the loan demand? And would you want to substantially increase your loan growth guidance?
So, Radha, thanks a lot for calling me on your show. Let me start answering your question. Loan growth during the festive period reflected strong customer sentiment and structural enablers. So just to give you a sense, on the Wheels business, we achieved a strong growth in October 25 versus 24 of 21%. And obviously, this was driven partly by the pent-up demand of September flowing into October and some of the GST rate cuts, which you saw, obviously the buoyant festive sentiment and positive customer confidence stemming from all the actions which the government is taking, and so is the regulator. And we saw some similar trends on the mortgage side. Even on the card spends, we got an extra boost with GST benefits coming in right at the start of the season. So we saw strong demand and double-digit growth across key categories such as durables, shopping, and online marketplace sales. For example, in card side, we had partnered with almost 200 brands during the festive season. So overall, the sentiment was positive. November, the trend is looking decently good. I wouldn't say, obviously, it will not be a repeat of the festive season, but overall, the market sentiment seems to be strong. You're also seeing clear upgrades coming through on the expected GDP growth rates. So I think that is also getting reflected in real projections on how the economy is expected to do. Obviously, I mean, there are always challenges, but overall, the sentiment does remain strong.
So you would want to give us a guidance?
Okay, sorry about that. Well, we are progressing well to be a stronger and sustainable franchise. We've been talking about that theme for quite some time. We do believe our platform will allow us to grow at rates faster this year than the industry. And this thesis, we believe, will continue to play in the medium term. The supportive regulatory conditions and the operative landscape obviously adds to our confidence. We have also said that in the medium term, which is defined as 3 to 5 years, we believe our advances growth will be above the industry growth rate. So, yes, obviously, the credit growth rate is picking up. The numbers seem to indicate that. The deposit growth rate seems to be a bit tepid. But our view is that given the pipeline we have, given the momentum which we are seeing, this year we should be able to maintain a growth rate higher than the industry. And then obviously, in the medium term, we also expect to continue to drive our platform accordingly.
Okay, time permitting, I will come back to this. The more recent news that hit the exchanges was the resignation of the chief risk officer. Now, actually, I went back. For the past year, you've had not just Amit Talgeri, which is the most recent risk officer, Arjun Chaudhary, the affluent banking and cards guy, resigned, S. Bhaskar, the chief of audit, Ganesh Shankaran, wholesale banking, that was 1 year ago in November. So, I mean, is there a pattern we have to read, or were these all personal decisions?
Oh, well, there is no pattern here in the sense that, firstly, recognize Axis Bank as a great platform where we are generating talent which people want to hire. In some cases, the decisions have been personal. People have been doing the same job for a long period of time and they want to take a break. And so in some cases, some of the names that you took, people actually have picked up jobs post leaving us, which are more slightly less intensive in nature than what they were doing earlier. So it's not leaving the organization, it's making a lifestyle choice. In some cases, they've got opportunities which are very, very different from what they were doing in Axis. I mean, you took one name where the person has gone and is running a very small company, but the potential to grow it larger is huge. This is kind of a completely different platform. So I think the reasons are individual. I don't think it reflects anything on Axis, but I'm quite glad that people are now seeing Axis as a place where they can hire extremely good talent.
Oh, yes,
and
yes.
We have replaced Amit with someone internally. So we have enough talent internally also where people are getting opportunities to grow.
Okay. No, if that's the reason, that's very good. I just noticed the pattern. Let me come to the other news which CNBC-TV18 broke. My colleague Yash Jain, broke a story on the Insurance Amendment Act that's going to be tabled on Parliament. And there is a major liberalization in the sense insurance companies may be allowed to merge with non-insurance companies. Now, you have, of course, Axis Max and Max Financial. Do you think, therefore, a merger is imminent? If this is allowed.
It's been on the cards for a long period of time, Lata. I mean, we have been hoping that the new insurance bill will allow a merger of these entities. The core business will obviously remain insurance, and that's the only business they will do. Here we have a unique case where there is a holding company which holds shares in an insurance company, and so, that's the only thing they hold. And we would like to have a merger so that the shareholders of that holding company can take, ownership of the Axis Max Life Insurance directly. Recently, you would have also been aware, when the story was broken, that IRDA has decided not to pursue the case in Supreme Court. So it's an indication from IRDA that maybe the bill is coming or they will allow something like this to happen. Our views are that there is further guidance expected from IRDA on this matter. And based on that guidance, we will act. Our intention and hope is that we will be allowed to merge the two entities so that there's only one entity which is out there. By the way, Axis Max Life is doing exceedingly well. And I think that is also reflected in the stock price and their market share gain. So we're very delighted with the investment we have made and how that entity is progressing.
Okay. You all had also expressed a desire to increase your stake in Max Life, that is Axis Bank's stake. But there was the SEBI investigation on the pricing. Anything latest from SEBI? And therefore, if that is a done deal, can you go ahead and raise your stake?
Well, the investigation from SEBI side is going on. Normally, these investigations and this process takes time. So we are going through the process. We believe that we have a very strong case here. That I think whatever we have done is with the full approval of the regulators involved. But obviously, SEBI as a regulator has the right to go deep into the case and take their view on whether what we did was correct or not. And we are going through that process. Okay. We would obviously like us to take our stake to 20%. We would also like to, understand once the Forms of Business Circular comes as to what some of our options are. Right now, we don't know. Yeah. And at the right stage, we will see whether we want to increase our stake or not. We cannot take that decision unilaterally. There are other shareholders involved. So it will take time. Right now, there is nothing on the card.
Fair enough. Fair enough. Anyway,